you look at this candle very well, you can see that here. I just want to remind you of this simple trick. Okay, so you can see that it is a resistance level, resistance. After breakout, it definitely is going to work as support, right? So support level, support twice. Now you wait for the market to get to that same level again. Okay, so if you look carefully, the market got to the level at this same point here. You can see you got to the level, you can see the buyers entered. How do you open your position? You can see you switch to the 5-second candlestick chart, the time frame. Look for a confirmation candle, just the way I taught you. Okay, look for a confirmation candle. So this is the bullish engulfing candle, and then look at this situation here. This is a reversal pattern in the market. Okay, you can see the weakness on the side of the sellers, and then you can see the buyers entered, and then you can I open the position here. Okay, so I open a position here, and you can see it was on it goes up. Okay, and it is a win. So you can see it's still maintaining the uptrend. You can see. Okay, the market got to the level, you switch to 5 seconds. Okay, this is the situation. Okay, these are the last few candlesticks. You can see a Marubozu candle, weakness in the side of the sellers. Okay, you saw a spinning top below, then followed by a bullish engulfing candle, and you already know that this is a support level, a buyer's area. Okay, so you open your position, and that is it. No long story. So the month, if I happen to take any other trade again, I will explain to you. So if you the market is approaching the same level again. Okay, so if we see any signal again, a confirmation, we open a position with the buyers. So let's wait if the market will get to the same level. Okay, you can see the buyers are entering again. So let's just hold on and see. So I'll pause this video yet. Okay, so we are still waiting for this the sellers to approach the buyers area. Okay, so if you look at the overall chart, generally you see so many wicks in the market, so many rejection, but it is a trendy market. Okay, it is a trendy market. You can see you saw this strong sellers. You can see that the market is trendy, even though we are seeing so many rejection, because it's I've been getting a lot of news updates. Okay, so it seems there are a lot of news in the market, but they are medium impact news. Okay, so you can see the market is actually reversing from this area, because this is an inverted head and shoulder pattern. Okay, this is an inverted head and shoulder pattern. Okay, so you can see this is the head, this is the left shoulder, this is the right shoulder, and the market is getting reversals from the shoulder points. Look, these are the shoulder points. The market reversed from the shoulder point completely here. Okay, from that level. So let me draw it so you can see. Use a horizontal line quickly, so you can see the shoulder point. You can see that the market is reversing from the shoulder point. Look at this is the shoulder point, this is the breakout again, and then this is, you can see that the market is reversing from the shoulder point. You can see complete bullish movement here. Okay, but we're expecting the market to reach this particular area here, so that if we get a signal just the way I taught you. You get any signal from this level, okay, if the market gets to this level here, okay, you can open a position for buy. Okay, you can buy, but from the shoulder point you can see the market is reversing. Okay, so maybe the chart may start to move like this. Okay, you can see that it is clearly a trendy market. Okay, maybe like this, like that. So um let's okay, let's wait again. Let me see, give it from now till 10:30 in the next 8 minutes again. Let's see how it goes. Okay, so you can see the market is still trying to reach this area here. It's moving, like the market is ranging right now. You can see it is moving in this pattern. So if we can get a breakout of the lower side, it will get to this level. If it breaks upward, it will continue to go higher. Okay, so it's 10:28. If I don't get any, if the market doesn't get to the level before 10:30, I'll stop because I'm going out. Okay, so you are going to wait and see. Okay, you are going to wait. The market is going up again, so I think I'll leave the market right now. It's just 2 minutes to 10:30. I'm going out by 11. So if the market gets to this particular point, you can execute if you get a signal. Okay, you can switch to the 5 second. Right now I'm on the 1 minute chart. Okay, then another thing you can do again is, if you see an engulfing pattern, okay, if you see an engulfing pattern after your first win, you can open again for the next trade, because the chances of it going up is going to be high again. Okay, the chances of getting a bearish, another bullish candlestick is high. Okay, I don't know, the market is pushing. Okay, let me be a little bit patient. It's approaching the area. Let's see. It has, if it breaks the previous shoulder point that the market is reversing from. Okay, you can see this shoulder point here. Initially the market has approached, is inside our area right now. A very strong move from the side of the seller. So let's switch to the 5 seconds chart and see if we get any confirmation candlestick here. Okay, we can go. All right. Okay, so you can see the where is my mouse? Okay, so you can see upon approaching this area here, we are seeing a Marubozu candlestick and then a type of weak bullish movement. Okay, like this. Okay, so this is not a reversal signal. Okay, this is not a reversal signal. So you can see that it may work, it may not work, but I opened a position for buy because of the pattern in the market. Okay, the range, the what is it called, channel pattern I taught you. So you can see it is a win. All right, so you can see it is a win, 2 wins. All right, so I'm off right now. It's 10:31 already. It's all right, thank you. Okay, so initially, if you listen to my message voice note, if you listen to the recordings, I said I was going to go out. I was about to go out, right? Okay, so but it happened that the trade got to our support level, with the level we're waiting for, and then we opened the position, right? So this is a further explanation of the trade again. Okay, so initially I took this screenshot as I actually was going to notify you. Today is a Thursday 28th of August 2025. Okay, so around I think that trade I was on the market between for 1 hour, 8 a.m. to 9 to 10 a.m. Okay, no, for like our 9 a.m. to 10:30 a.m. That is over an hour, close to 2 hours, because it was even not exactly 9 a.m. So, but that's by the way, Dosha. Today, 28th August 2025, right? So, I took this screenshot. I said I was going out. So, initially, I was going to contact you via WhatsApp to come online and wait for this particular position to this is our entry point, right? We opened the first position here, so we're waiting for the trade to hit this level again. Okay, so I was going to notify you via WhatsApp. If you are free, come online and wait for it and use the signal, because this is how they give signals. So you can use the position, I mean the reversal pattern I taught you about, or how you can open a position, right, on this particular chart. But it was fortunate enough that the market quickly got to that level, and then we opened the position, right? So this is the trade. Okay, this is the chart on 1 minute. Okay, so this is the same chart, this same chart here. So we're waiting for this market to hit this level. We're waiting for this market to come to this level like this. Okay, this is our support level. Okay, so waiting for the market to come get to that level. So upon reaching that level, I saw this particular strong bearish candlestick got to the level. So you can see initially I told you about the shoulder point, right? The market reversed from the shoulder point. Okay, suddenly it began to go down. Okay, so I saw this last bearish candlestick. Let me zoom in on this particular bearish candlestick. We saw the move on the candle, so we waited for the market to close this bearish candlestick here. Okay, so we waited for the market, the candle to close, then we opened the position after getting confirmation on this particular candle. This is the 1 minute chart. So look at the last two candlesticks, the bearish candle and the bullish candle, knowing fully well that this is our support level. So we can expect the reversal from this level. Okay, we can expect the reversal here. So this is our support area. This is our support area. We can expect the market to reverse when it hits this particular area again. You can see the market got to the level. So upon reaching the level, we'll now switch to the 5 seconds chart. Okay, we'll now open the 5 second chart. On opening the 5 second chart, look at the reversal. So look at the 5 second chart. This is where the whole thing happened. Okay, good. So you can see when the market hits this particular level here, we saw this bullish reversal movement. Okay, and then finally when the candle closed, we saw a doji. You can see this black doji candlestick. This tiny one is called a doji candlestick. Okay, after the doji candlestick, I saw an engulfing candle. So the market was moving like this. It tried to form a channel. Okay, so after breakout of this level, we can expect the market to move up. Okay, so we opened a position. We opened a position here. Okay, after spotting the doji candlestick. So remember, this was the let me explain again. This is our support level, right? This is the 5 second chart, please. This is the 5 second chart. We have switched to the 5 second chart. This is the screenshot of the 5 second chart. Okay, this is our support level. Once this bearish candlestick got to this support level, we saw a rejection. Rejection means buyers entered. Okay, you can see this bullish movement here. Okay, so gradually we're seeing I saw a strong bullish candle followed by bearish, so many bullish candlesticks. You can see this was the bullish candle. Okay, the strong bullish candle followed by another candle, followed by this particular candle. No upper wick. We are seeing lower rejection, meaning because this is a support level, meaning the market wants to go up. And as the market got to this level again, we saw a doji candlestick. Okay, you see that black candlestick, that is a doji candlestick, and then an engulfing candlestick. Finally, the market shoots up. Okay, so this is just an explanation. You can see it is a win. You can see let me go back to the 1 minute chart. You can see this is how the candle eventually closed. This is the candlestick here, this last candle here, this one. That's the candlestick. You can see the candle close, and then from the same level you can see the market moved up. You can see, because this is a support level. Okay, so even though you open the trade for 5 minutes, 10 minutes, 15 minutes, you will be in profit. Okay, and 1 minute. So I only open the position for 1 minute with confirmation from the area. Okay, with confirmation. So you can see that is how the trade eventually closed. Okay, so I hope you are using this same strategy to practice. Mark out your support and resistance level. Look for after marking out your support and resistance level, wait for the market to get to that point again. Once the market gets to the point, switch it from 1 minute to 5 seconds. Okay, if you see a weakness on the side of the sellers, okay, and then you get you got a reversal candlestick pattern, especially an engulfing candle on the 5 minutes, on the 5 seconds time frame, you can open your position and see how the results will turn out to be. And definitely it's going to be a profitable trade, especially if the level is working and it's a strong level and you map out strong and good areas very well. Okay, so that is it for this explanation. I just choose to explain this further because I just have this feeling that you are not doing what I'm asking you to do. I don't know what you are doing, if you are even practicing. So I just decided to fish out this small trade this morning. Look out for this thing so that I can take a live trade and show you the position. So even though here you can see that upon reaching the level, you can see that this is the engulfing candlestick. Here you can see a strong bullish candlestick. Okay, the market reverse. So you can see that this engulfing candle here, you can see that engulfing candlestick, and then because of that engulfing candle, the market shoots up because this is a support level. Okay, so all right, that is it. Okay, so okay, on the trade, I actually was telling you about the channel pattern the market was moving. Another reason why I took the trade, because this is it. Okay, so take care. Have a day. So for your question concerning time frame, okay, so each of the candles represents a particular time. I'm not going back to that. Just go back to the previous class and check. Okay, each of these candlesticks represents a particular time. If it is on 1 minute, it means it is going to form within 1 minute. If it is on 1 month, it is going to form within 1 month. All candlesticks are the same, be it doji, spinning top, marubuzu, inverted hammer, all of them, they are all the same. A doji candlestick can form on 1 week, on 1 month, or at any time frame. Okay, 5 seconds, the same thing. The market can form any structure on any time frame, the same thing. There is no difference. Okay, so the only thing now I want you to understand here now is, if you are trading on the IQ option platform, okay, just note that you can, this is the area where you select your timing. Okay, now if you click that place, you are going to see all the time, right? 1 minute, 2 minutes, 5 seconds, 10 seconds, 15 seconds, 30 seconds, 5 minutes, 10 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours. Okay, up to 1 month. Okay, so if you click this particular session, if you click this particular area here, okay, click there. Those are the time frames. Okay, you will see we have 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes. Okay, now look at the time. You can see that it is counting down here, down. Okay, like this. Look at the entire time there. Okay, 6 minutes, right? 23:30. This is, yeah, okay, this is, I think this is 30 minutes, 15 minutes, 1 hour, 1 hour 15 minutes. So but you don't need all of those higher time frames, so you just need to stick with these particular ones from 1 to 5 minutes. Okay, okay, so you, but if you choose to open position for 15-30 minutes, is all your choice, just like I illustrated in our previous video. All right. Okay, so looking at this situation now, so the time frame and the candlesticks, they are all the same thing. So if you are zooming out your chart like this, okay, you are zooming out your chart like this, if you notice that this particular timing here is either expanding or decreasing, this one here. So this chart now, it is written 3 hours there. That means you are seeing the chart for the entire 3 hours. Okay, you are seeing it for the entire 3 hours. So if you zoom in like this, you will look at it as it is changing. So it depends on the speed at which you are zooming in. It has changed to 30 minutes. It means I'm seeing the chart mostly for the next 30 minutes. Okay, if you zoom out, okay, you can see it's still on. Now it has changed to 15 minutes. Okay, I think now it has changed to 5 minutes. I think 5 minutes is the highest. Okay, so I'm looking at the entire market for the past 5 minutes. This thing, it changes automatically. You don't have any business there. 1 2 3 4 5 6 7 8 9. So it's going to show you more candlestick, but it is for the next 5 minutes. Other candles will show you, but clearly for the next 5 minutes. So that one is automatic. You don't have any business there. Where you have business is here. You have business here. This is where you are changing your timing. So let it always be on 1 minute. Okay, and on, if you're opening a position on options, like if you click this particular area here where you change the currency pairs here, okay, if you click there, you will see forex, option, and the rest. So you can change to forex, change to option, change to anything. Okay, so let's finish with this option, then we can come back to the option FX. Okay, so click options. You can either use, don't use blitz, you can use either binary or digital. So I advise you, recommend you use binary. Okay, so you are looking at binary options. Okay, you can select any time frame of your, I mean any candles, any currency pair. Let's select USD CHF, which is United States dollar Swiss franc. Okay, so if you select that currency pair, now the market is on one, the candles is on 1 minute, right? It means that every candlestick you see here is formed within 1 minute. So let's open a position for 1 minute and see. I'm looking at a support area here. Okay, so this is a support area. So if you open a position for 1 minute, it means that the candle will form after 1 minute. Another thing you need to look at again is this countdown timer here. This timer, you can see it is counting down. At the end of 30 seconds, a new candle will open. You can see a new candlestick has opened. Okay, now you can start counting. It is going to start, it is counting down now. After 1 minute, that candle will close. Okay, so it opened at the buyers area, and you can open your trade within the next time 30 seconds. Okay, if you are trading on options, so you can see I opened a trade, a position for with the buyers. Okay, I opened a position with the buyers. So you, within the first 30 seconds, you should open your trade. Okay, After the next 30 seconds, you don't have any trade, you don't have chances of opening any position again. You can see 7, 6, 5, 4, 3, 2, 1 is going to close after 2, 3 seconds. 1. Now this position has closed. Okay, so if you win the trade or you lost the trade, is going to display immediately. As you can see, we lost this trade. Okay, you can see clearly we lost this trade. So after 1 minute, the trade will close. Okay, so let me take another one again. All right, so this trade is going to close after, now it has closed, right? This trade has closed. You can see you have the next 30 seconds to open a new position. So this is how the IQ option timer reads. But for the Olympic timer, it reads directly from 1, 2, 3, 4, 5, 6 up to 60 seconds, straight 1 minute. Okay, so this is what you need to understand. This timer counts from, you still have like 5 seconds, 3, 2. Now you can no longer open any position. You can see you can no longer open any position like this again. You have to wait for this candle to close before you open a position. Okay, before you can open any position, you have to wait for this candle to close. Okay, now in the next 40 seconds, 36, now you can see this candle will close. Now after 1 minute, it has closed. You can see now a new candle has opened. So you have the chance of opening a trade for the next 30 seconds. 19, 18, 17, 16. Look at it, it's counting down. 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Now you cannot, after this time elapsed, you cannot open a position again. If you open a position now, it is going to close on the next candle because it is no longer on 1 minute, because that 1 minute must complete. So let's open a position here now. You can see if I open a position here now, it's not that the position will not open, but it will not close. The trade will not close at the close of this particular candle. It is going to run for till it enters the next candle. Now the next candle is going to open after 30 seconds. Now it has opened. Okay, you can see that our position is still opened. Okay, you can see that our position is still opened because we opened the trade late on this particular candle. Okay, I opened the trade late on this particular candle. Okay, now the candle has actually closed, but the 1 minute must elapse before you can see your result of trade. Okay, before you can see the results for the trade, the 1 minute must elapse. So you can see the 1 minute now, we still have 16 seconds, 15. Okay, so you can see 3, 2, 1. Now this candle has closed. So you can see it is a winning trade after 1 minute. Okay, after 1 minute. Now you can open a position for this particular trade. Okay, for the next 17 seconds. So what you have to bear in mind is that once a candlestick closes or once a new candlestick opens, you have until 30 seconds. Okay, you have until 30 seconds to open a new trade. So if you are opening a trade within the first 30 seconds when the candle opens, your trade is going to close in that same candle. But if you open the trade after the first 30 seconds, your trade will run till the next candle because it is no longer on the 1 minute. Okay, because each candle must close after 1 minute. Each candle must close after 1 minute. So if you are opening a position after 30 seconds after the time has started, it will enter the next candle because it must reach 1 minute. I just hope you are understanding this thing. So okay, so let's see. Now this is the next candle. We still have 10 seconds to open a position here on this same candle. So it now gives you room to open a trade with price action, what we call price action. Let's say you don't want to open your trade at the opening price here. You want to open your trade somewhere around here, okay, and still make profit. It gives you the room to open trade. You can see the price is rejecting. Okay, so if you open this trade below here with buyers, you know the goal of trading, if you are buying, is for your trade to close above your position, then you will be in profit. If you are selling, is for your trade to close below your position, then you will be in profit. Okay, so that means despite the fact that this candle closed as a bullish, as a bearish candle, if you had opened your position here within the first 30 seconds that the candle started to run, you would have been in profit because it is going to close above your level with buyers. Same thing with this bullish candlestick. If you had opened your position here with sellers when the market hits that level, okay, and now the market got to this high and rejected down and then closed at this particular level, so if your trade is here, you will still be in profit despite the fact that you sold the candle close as a bullish candlestick. Why? Because it closed below your entry point or your position. Okay, so let's see if we can see if a high volatile market that we can practicalize this thing. Okay, let me look for a market with so much volatility, because that is where we can that is the only market we can use to practicalize this. Then I will show you on live chat. Okay, so you can see this trade now. This is, we still have 7 seconds to open a position. Now I'm going to open, even though it is a bit late, I wanted to open this position somewhere around here, but because I'm explaining, but I just want this concept to be understood here. Why? Because I saw previous rejection point here and here also. So I expect this candle to close as a wick, with a wick, okay, or with a shadow, or with what we call price rejection. Okay, so you can see it closed above our entry point, okay, for 1 minute. You can see it closed above our entry point. Okay, it's closed as a Marubozu candlesticks. So you know what a Marubozu candlestick is. No lower wick, no upper wick, or maybe little wicks attached to it. Okay, so you can actually get this thing in, let me see, let me navigate through this chart properly if I can see a highly volatile market. Okay, I need a market with so much volatility. You know what I mean by volatility. I need a market with so much volatility. Okay, so okay, there is the market is just so good, but let's see, market is good, quite good. I just want to illustrate this trade. I know your problem now is opening and closing of trades. Okay, so let's use this. Now you can see this is a this candle has just opened now, this current running bullish candlestick. Okay, so if we want to open a position with price rejection, and we still have 13 seconds to open this trade, so we can assume that maybe because of previous rejection points, now I'll open this position for sell. Okay, open the market should close below my entry point with a rejection, with a price rejection above. Okay, even though I sold, you can see the sellers are entering. It may close as a bullish candlestick, a green candlestick. Okay, it may close as a green candlestick, but provided it closes below my entry point, I will still be in profit because I sold. So you can see that it closes below my entry point. It is a winning trade. Okay, it is a winning trade. So I will still wait for this market and see what is going to happen. So you can select your the amount of trade you want to open, right? Now the timer has, the first 30 seconds has elapsed. I can no longer open a position here for the candle, for the market to close within this same candle. It will run till the next candle because the 1 minute must elapse. So the same principle is applied. I'm just using 1 minute for example. It's same thing applicable for 5 minutes. Same thing applicable for 10, 15 minutes, 1 month, 1 hour. Okay. So let's look out for a highly volatile market. Let me see a market with enough volatility. Okay. Now you can see there's not much volatility here, but I'm seeing rejections. You can see. So let me open with a lower trade here. Okay. So if it closes below, you can see the entry point. You can see the red line as is indicating where, if you open a trade, you can see this line here. It's showing you where you opened your trade from, right? So if the candle closed below that level, it is going to be a winning trade. Okay, so you can see it closed above the level. Now you can see, so you can see that this candle closed above the level because I opened a position here with sellers instead of buyers, right? This is a bullish candlestick. This is a bullish candlestick. Okay, so I opened the position with sellers, thinking because of this previous rejection, the market may reject, but it closes above my level. So if you are entering a position for 1 minute and then it closes above your entry point, it is a loss. So that is why I ask you to open your demonstration account and continue to practice these things. Once you get used to it, you get to understand it very, very well. Okay, you get to understand it. It's very, very simple. It's no big deal here. So it's always going to be like that for the very first time. So now this new candle has opened. Okay, this new candle has opened, and I still have 19 seconds to open a position, and I'm opening a position here. Now I bought at this particular area with price rejection. I bought below here. Okay, I bought somewhere around here, hoping that the market will close above my entry point with rejection. So you can see that is the advantage of the timer. So it gives you room to open a position or your trade at a particular area, especially on 1 minute candlesticks. Especially on 1 minute, it gives you the opportunity to open trades at particular levels when the market, you are expecting the market to reach and get rejection. Now you can see that this candle, despite the fact that it closed as a bearish candlestick, You can see, despite the fact that it closed as a bearish candlestick, I still won the trade here. Despite the fact that I bought. You understand? You are expecting the candle to close as a bullish candlestick, right? No, it closed as a bearish candlestick, but it closed above my entry point. Okay, so that is the goal of trading. So if you are saying a country's currency is going to appreciate over another country's currency, looking at the economic calendar and every other what language will I even use there? Every other factors in place, you open a position for buy or sell. Okay, so despite the fact that it closed as a bearish candlestick, I still won the trade because it closed above my entry point. Okay, so the same thing with the bullish candlesticks. The same thing. So you can open a position with a, okay, like look at this particular candle now. It closed with a rejection. If I had not been explaining and I opened the position here at this particular level, you can see that the market got to that high and then dropped again. And even though it closed as a bullish candlestick, but if I had opened a position here, it would have closed below my entry point as a bearish, as below my entry point, and I would have won the trade. Okay, so that was why in candlestick anatomy, where I taught you that you see wherever the candlestick has reached, if it is going up or down, any level the candle touched is going to leave a wick or shadow. Okay, at that particular area. So if you look at this candlestick, you'll be seeing so many wicks or so many shadows. Okay, so you can see. So now let's open a 5 minutes time frame trade. Okay, if you click this particular area here, look at it here, you can change it to 5 minutes here. Leave it on 1 minute. Okay, but you can decide to open a trade for 5 minutes directly. Now each of these candlesticks represent 1 minute, right? But I'm going to open for 5 minutes time frame. It means that the candle will move for the next 5 minutes. You are going to count 5 candlesticks. After 5 candlesticks, the market will close, or the trade will automatically close. Okay, so let me look out for a, okay, this is a very good uptrend. Okay, but at this level now, the market there is a strong rejection and downtrend. Okay, so let's open a position for 5 minutes for the next 5 minutes. Okay, you can see. Now, one of the reasons as newbies why it's good for you to open position on higher time frame, 5 minutes and above, is because it gives you room to settle down and think. Okay, it gives you room to think, because the 1 minute trading is very fast. It's going to close within 1 minute. Okay, but for 5 minutes you have enough time, 1 2 3 4 5 minutes to think, to analyze. Okay, so if you are opening a position for 5 minutes, for the next 1 minute and 15 seconds, for the next 1 minute and 15 seconds, or on the first candle, make sure you have opened your position. Okay, else it's going to run into the next other candlesticks after 5 minutes. The same principle on the 1 minute candlestick. Okay, so now I've opened a position for 5 minutes on this bearish candlestick here. This particular candle, this was where we opened our position, this candle. So 1 minute has elapsed already. Okay, and the reason why we opened the position for 5 minutes is because if you look carefully, if you look at this chart, overall is an uptrend, right? But at this particular area here, the market came down. So it is from here, you can see, and then the market approached the same level. So this is a resistance level. So we can expect a downward move on the side of the sellers. Okay, and if you look carefully, you will see that there's already a strong rejection in prices from sellers at the level. Okay, you can see this candle wick here. You can see it was a bullish candlestick. It goes up, got to that level, and then it rejected and closed with a wick or a shadow. Okay, so 2 minutes has elapsed. This is the third candle. So in few seconds, the 3 minutes will soon be over. Okay, so you can see. So this is the 5 minutes time frame trading. Okay, so you can see you can be able to count your candlesticks for the next 5 minutes. The goal is for the trade to close below our entry point. That is the target. Okay, looking at all parameters, everything in place. I opened this trade because of the resistance. Okay, the market has actually reached the next resistance level, and I saw a rejection in price at that particular area that I showed you, and then a strong bearish engulfing candlestick again. So hoping that the market will go down. Okay, so you can see now I did proper analysis here, and you can see that everything is going in our favor. Okay, so the goal, if when you sell, the goal is for the market to be below your entry point. If you buy, the goal is for your market, the trade, to be above your entry point. Okay, 1 2 3 4. This is the fourth candlestick. This is the 4th minute. Okay, so this is, we are in the last 5 minutes now. So this is the 5th minute now. This is the last candlestick. Okay, so at the end of this time, the candle will close 5 minutes. Okay, 5 minutes candle. Okay, we still have like 40 seconds. So we can see we are in the last final 30 seconds. So you can see here it is written expiration time. Expiration time, the 17 seconds. This has a total investment of $10, where the profit of 87%. So 87% of $10 is $8.7. Okay, so you can see that the market, the trade closed. This is 5 minutes on the dots. Now you can see 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, 5 candlesticks. Okay, so it is on 1 minute time frame. Sorry, it is 1 minute candlestick, but I opened the trade for 5 minutes time frame. Okay, so you can see all the candlesticks are formed within 1 minute. This is 1 minute, 1 minute, 1 minute, 1 minute, 1 minute. But it took 5 minutes for the trade to close because it is on 5 minutes time frame. So that is the concept of the question you asked about time frame. Okay, so I actually was going to take out my time to show you this thing so that you can know how to open positions. Okay, so you can see it is a winning trade. Okay, because the trade closed below our entry point. Okay, okay, some news in the market, because today is Monday, market has opened, and today is 1st September. Oh, happy new month. September 1st. This is 23:47 already, so in the next 30 minutes we are entering a brand new month. All right, so this is how you can open a position for 1 minute candlestick, but on 5 minute time frame. Okay, but if you want to open the candle to close exactly on 5 minutes, you can come here and change it to 5 minutes. Okay, so each candlestick here represents 5 minutes. So if I open a position here, it's going to close for for the next 5 minutes. Okay, but personally I don't use this strategy. Okay, I'm only going to show you what I do. Okay, So you can leave your position for 1 minute and change here to 10 minutes time frame. Okay, you can change it to 10 minutes time frame. Here is 10 minutes. Okay, that is 6 minutes rather. 6, 7, 8, 9, 10 minutes. Okay, 21 minutes. Okay, so you can change it to any time frame, but preferably we don't waste much time here in trading. Okay, so 5 minutes is enough. 5 minutes is enough for you to do your analysis and open your position. Okay, 5 minutes is more than enough. So always leave it 5 minutes. Look at the trend first of all. So let's open another chart. So I've showed you for how to open your position on 1 minute, and it is going to close exactly on 1 minute. So if you want to open your position on 1 minute, you come to this time frame session where it is here. The first one is always your 1 minute candlestick. Okay, so you leave it like that. Now, okay, I'm looking at the potential of buyers entering this particular chart here, because there is a support level there. Okay, it's a support level. So you are going to look at the overall chart. Is it ranging? So this is a downtrend market. It means the sellers are more active in this chart. Okay, but at this particular time we are seeing buyers. Okay, so now this is a very strong Marubozu candlestick. So this is where we make here. You can see buyers, and this is a Marubozu candlestick at the level. Okay, and I told you that Marubozu candlesticks, spinning top and the rest, sometimes they may reverse the market. So since you are trading on 1 minute, you can open a position for with buyers, or you can open a position with sellers. Okay, but for this situation, you can see in the next 52 seconds it is going to close. Okay, so you can see the buyers are entering because this level is a buyer's zone, even though we are seeing a weak buyer. So in this type of situation, you can, because of this previous candlestick is a Marubozu candlestick, is a very strong candlestick here. This candlestick here is a very strong candlestick. This particular candle here, this is a strong candle, right? So we can expect sellers again to enter, because this is not actually, the overall trend is a downtrend, so it means sellers are active now. But if you open your trade with some margin of safety, that's what we call margin of safety. Margin, like this, margin, margin of safety. Okay, the margin of safety is just what I've showed you all the while, is what I've been explaining all the while. Okay, so you can wait for the market to get to a particular height. Like, since you are seeing a strong bearish engulfing candle and the market is a downtrend, the best thing to do is to open position with sellers, should in case the market didn't close as a selling as a with sellers, or in favor of sellers, or as a bearish candlestick, you are still going to be in profit because of your safety zone. Okay, because of the margin of safety. Okay, so you are going to allow the market to hit a particular resistance level. Okay, so if you look here carefully, you can see there is a buyer's level here which formed a support level. This is a buyer, right? Even though it's a downtrend, but this is now a support level. Okay, so as the market pushes up, hits that level, you can open a position with sellers and then allow it to go down for within the first 30 seconds. But if the market didn't get to that level within the first 30 seconds, then that means there's no opportunity there. You can ignore that trade. You can ignore the trade. Okay, So this is a downtrend market. It's a downtrend, you can see. So it means the sellers are very, very active, but there is support level here. A support level is the buyer zone. Like you can see, this is not a strong level of support, because if you look at this support level here, you will see that there are buyers, there are sellers, buyers, sellers, before the buyers pushed up. Okay, sometimes I don't really consider here to be a strong level of support. But if the buyers had entered directly like this, it is going to be more effective. Okay, like this. So you can see straight buyers entered. Okay, now it may not work as a level. The buyers may not, it may not work as a level because of this structure. Look at this, is the structure of the market. Okay, it's moving in a channel. So this will not be your next level. Okay, your next level will be on the lower support level. Okay, so market structure matters a lot. Even though you are seeing a strong buyers in the market or strong sellers, you are going to look at the structure of the market first before you open any position. Okay, so if the market is moving in a flat range or a ranging market, you can open a position with those key support and resistance areas. Okay, so what have I not explained here again? What have I not explained? If you have any other question, please just you can just ask, just as usual. Just message me on WhatsApp, please. Okay, so this particular chart, this is a downtrend. Okay, so in summary, what I want you to be doing, okay, in summary, is always leave this on 1 minute, please. Okay, remember that I said I'm going to explain the FX on. Okay, this is FX options. Okay, always leave it on 1 minute. Okay, but the time frame for each trade you are going to open, please switch it to 5 minutes. And as you switch it to 5 minutes, it's going to show you here 4 minutes circled. Okay, look at 4 minutes. You can see. If I change it to 1 minute now, it is going to change. That circle is going to change for 1 minute. You can see. You can see that the timer is counting down there. 6, 5, 4, 3, 2, 1. Now we cannot open any position on the present candle again. You have to wait for the next candle. Okay, except maybe you want to open a position and allow it to run for into the next candlestick. Okay, you can do that, but you have only the first 30 seconds on 1 minute chart to open your trade. To open your trade, you have just 1 minute. Okay, so congratulations, we have spent, I think we have exhausted our 3 months class already, but what we are doing now is guidance, right? Questions, answers, anywhere you have any issues, anything you don't understand, you can still ask. Okay, so like play, time really flies. Like joke, 3 months have actually elapsed since we started this teaching series. Okay, all right, so let's switch to the FX, and let me show you, in case you want to open a position for Forex. You can see, you already know how to do that. You click. Okay, so you can switch to the Forex chart. So let's change to this forex chart so that, let me show you something. So you select, let's just select the first one, which is euro US dollar. All right, so okay, all right, so you can see the here signifies sell, and you already know the red is always sell, the green is always for buy, right? You can see red is going down, green is going up. So those are the two buttons you will be making use of. And then you can put a particular amount. Okay, let's say you have a trade balance of $1,000 here. Okay, so you have $1,000 at this particular area. You can select maybe to open a trade with $50. Okay, and this is your leverage, also known as the multiplier. Where it is written multiplier is your leverage. So you can select the amount like that. If you click the amount button, you can see change it to any amount of your choice. So I've changed it from $5 to $10. Then multiplier, which is your leverage, times 25. Okay, means that if the asset price changes by 1%, your position performance will increase by 25%. So if I put $10 here, which is my multiplier, that is leverage, it means that my trade position has been increased by 25 times. You remember what I taught you about leverage? Okay, so instead of opening a position with $10, I am opening a position of 10 times 25. Okay, 10 times 10, 125. That should be around 150. 25 times 10. Yes. Sorry, what am I even calculating, safe? So this is 250, 500. Okay, times 25. So if it is 500, this is 1000, this is 2000, and 500. Okay, so multiply 10 by 25. The value you have is the position that the market is going to move per pip. Okay, remember pip, price interest points. It is going to move by that position. Okay, so that is the leverage. So you can increase the leverage, because I think it's just let me use all the amount and see. So you can increase the leverage. So you can increase the leverage by 25%, 500%, 1000% also. Okay, after putting the leverage, looking at your chart, is the market going up or down? Okay, so if you are going to go with buyers, you buy. If you are going to go with the sellers, you sell. Okay, so for this is 7 days chart, which is 1 week. Let me change it to 5 minutes. So you can open your position for 5 minutes, 10 minutes, 15 minutes, whatever. Okay, candlestick time frame, this is 5 minutes. Now it is 5 minutes, but that doesn't mean that it is going to close after 5 minutes on the FX platform. The option FX, the candle closes automatically after the timer finish counting, or at the time you selected. If you select 5 minutes, it is going to close after 5 minutes. If you select 1 hour, it's going to close after 1 hour. It closes automatically. So for the FX platform, it doesn't close unless you are going to put what we call your stop loss or your take profit, or you close the position by yourself. If you, let's say you are on the chart, But if you are not on the chart, you can set your position. That is the good thing about trading. If you can open a position and just leave it and go about your daily activities. Okay, once it hits your take profit, automatically the trade close. Once it hits your what is it called, what is it called, stop loss, it is going to exit you from the market automatically. It's going to exit you from the market automatically. Okay, so each of these candles represent 5 minutes. Excuse me, it represents 5 minutes. Okay, each of these candles represents 5 minutes. So if I open a position, that doesn't mean that after 5 minutes it's going to close. It will continue to go up or down, depends on the direction I choose. Okay, depends on the direction I choose. Okay, so here the same thing. You can see, you can choose to open a position at this particular area, this rejection point here. Okay, you can choose to allow the market to reach this rejection point in the future here, then you open your position. Okay, so let's see. So you can see exactly at that rejection point, you can see that the buyers entered. Okay, you can see that we are seeing this buyers entry. Okay, so that's that for this. So switch between FX and option, whichever one is suitable for you. Okay, and open your position. So but if you are trading on FX, make sure you have put your stop loss and your take profit. Okay, if you know you are not going to be on the chart, but if you are going to be on the chart, no problem, you can open your position and then watch it. Okay, and then close it manually by yourself. So this is, let me show you, this is the area where you can put your stop loss and take profit. Okay, so you click this place where it is written auto close here, automatically, that is automatically close. So you can automatically close your trade when profit is, you set it by either percentage or by amount. Okay, profit in percentage, profit in money, or asset price. So if it is profit in money, you can say, okay, I want my position to close when this profit has reached $500. Okay, then for the stop loss, you can say, okay, when I lose $10, I want the position to close $10. Okay, I want the position to close. Then remember what I told you about trailing stop loss. Okay, trailing stop loss or trailing your profit is when let's say you open a position at this particular area. I've already explained these things to you. I'm just going over there. Let's say you open a buy position here and the market got to this level here. Okay, you can put your stop loss somewhere around here so that you can secure some profit, so that should in case the market drops again, it's going to exit you out of the market and you still be in profit. Okay, but peradventure it favors you and pushes upward directly, no problem. Okay, so now that I've placed this particular trade, let me switch to a much lower time frame, like 5 seconds, and open a position with let's see what this charts with the buyers, because let me see if this reversal pattern here. Okay, with sellers. Okay, So you can see I just opened a position with sellers for the FX platform. Okay, and if I automatically, now you can see after opening a position, you can see settings button. You can see this is a settings button, and this button that is written close, once you click it, the trade will close automatically. Okay, so automatically close at 10 minus 10%. If I click there, automatically the trade will close and I will lose 10% of my investment. Okay, now you can click the settings button and adjust your settings. Okay, you can click the settings button and also adjust it. Okay, now I set it that when the trade hits a profit of $500, it is going to automatically exit me out of the market, or if I hit a stop loss of $10, I will be automatically exited out of the market, and I've applied it. Okay, I've applied it. So if you look carefully, it is written boldly, automatically close here, auto close at plus 1082%. Okay, then automatically closes at minus $10. Okay, so I set my profit by amount. Okay, by amount, so that it will be clear, but you can choose to set by percentage, profit in percentage. You can choose to set by percentage, whichever one. You say, okay, I want my account to increase by 100%, then close. So that means whatever you have, if you have $1,000, once it reaches $2,000, it closes automatically. Once it reaches, let's say you want it to increase by 200%, so once it reaches $3,000, it closes automatically. Okay, so I'm going to manually close this trade by pressing this button here, close, so that you see it. Even though it has not reached where I want, you can close it here, manually close. So you can see I've closed it. I lost 2 cents. Okay, minus 0.2, so you can see my balance is still there. So this is how you can open a position for FX. So it's the same thing with your MetaTrader 4. It's just the way you use them that is just different, slightly different. On MetaTrader 4, you can put your lot size to be 0.1, 0.2. You have already set your what is it called, leverage. Okay, while you were opening the account. Okay, your leverage is already there, so you can open your lot size. The lot size of 0.1, you already know the amount that you are going to be making with a lot size of 0.1. So it's the same thing here. You open your position with, you put the amount, which is like the lot size, and then you select your multiplier, which is like the leverage. Okay, which is the leverage. So the reason why I ask you to be using this platform is because of the option, FX options that it has. Okay, select binary, select any currency pair of your choice, let's say US dollar, Japanese yen. Okay, so you can open your position within the next 1 minute, within the next 5 minutes, immediately. Okay, you can open your position immediately, and after a particular time frame, you see your profit, whether you made profit or you lost. Okay, if you made profit, you see it. If you lose, you see it. So we have 3 seconds for this chart to close. Now, if you look at this chart carefully, this is a downtrend market, right? There is a downtrend, but there is a level of support here. Even though ideally, you are supposed to wait for the level to work at least twice. The first time and the second time, okay? Before you can decide to use it. To be on the safe side, you can use it for the 3rd time. Okay? And now you can see the market is not respecting the level. Why? Because this is the movement of the market. Look at the market structure. It is a trendy market. So in a trendy market, these are your levels. This is your resistance. This is your support. Okay. But in a flat or ranging market like this is your resistance. This is your support. Okay. So if you are in a flat market, the buyers will always enter. If this is a flat or ranging market, okay, like this, okay, this is resistance, this is support. So buyers will always enter from the resistance and the support zones. Okay, buyers will always enter, buyers will enter from here like this, sellers will enter from here like this. But if the market is trendy like this, if it is going down or up, if it is trendy like this, you can see. So this is your seller zone, which is resistance. This is buyer zone, which is support. Okay, buyers will enter from here, 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 here. Sellers will enter like this. So those are your entry points. Okay, those are your entry points. So should in case you are looking at the market like, okay, this is a zone, you can see this is a support area. The market will not, the buyers will not enter from this support area until they reach this particular level here before they will go up. You see, there's always going to be a breakout. There's always going to be a breakout. Okay. So that is why in this situation the market didn't reverse from this particular area. Simple as that here. Because of the market structure, it is a trendy market. Okay, so if it were to be a flat market, you can expect the buyers to enter directly. Okay, it's all right. So I'm going to stop here. So like I said, any other question, please, you are free to ask, and then you can still practice these things again. Continuous practice will always make perfect. Okay, so that will be all for now. Let me sleep and rest.